Good morning and welcome everyone to Money Control live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Indian equity market set for a positive start, taking positive handover from the global market. Earnings continue to trickle in. Focus now shifts to RBI monetary policy outcome. Consensus view suggests that Reserve Bank of India is unlikely to cut rates ahead of the rate cuts by Fed. GIFT Nifty indicates a positive start coming in for the broader index in India with gains of more than 100 odd points, and US market shut shop higher on Tuesday. Well, investors scrutinized a mixed bag of earnings at big US companies and digested comments from Federal Reserve policy makers for clues about its first planned interest rate cut. Asian markets at this point of time, they've been trading higher. Kospi has gained a nearly 2%. Talk about the FII and the DII trend. Well, the foreign institutional investors have bought in equities for yet another session, but the amount remains minuscule, 92.52 crore, and DIIs have purchased equity to an extent of 1,096 odd crore. That's that we have in terms of the trade setup. We are perhaps waiting for Nifty to scale past that record high level. Analysts believe that stock-specific action and sector rotation are likely to continue during this phase of consolidation. Remains to be seen if we can see some amount of fair bit of breakout in either sides. Right now, it suggests of a gap-up start. Remains to be seen if we actually follow the global handover. But Rajesh Palviya, Senior Vice President Research at Axis Securities, joins us here. Morning there, Rajesh.
Good morning, Nickey.
All right, Rajesh, what's your initial assessment? Trade setup for Nifty and Bank Nifty essentially. Do you think Nifty would be able to scale past that record high levels and give a gap up start?
Definitely, it's a very strong setup for Nifty, at least looking at the data. Yes, put base has shifted higher. Most of the put writers are now writing put around 21,800, 21,700 strikes. So that clearly shows base has already shifted higher. Call writers have covered their position in previous session. Most of the large cap stocks are now participating. The sectors which were in consolidation now started, contributing to this upward momentum. We have seen metal and IT has started contributing to this rally. So looking at overall structure, market breadth, we believe that, yes, this momentum can continue and possibly we can surpass 22,000 level and we can scale up to the new all-time high level also in the continuation of this up move for Nifty in the coming trading session. So possibly, yes, long build-up was there in the data. So to play this up move, I think one should initiate to buy 21,950 call option to play this up move, which was closed at around 107, 108 kind of range. Keep your stop loss at 75 and possibly we can see target towards 155 to 165 for that call option. So yes, Nifty is looking very attractive, though there is underperformance in Bank Nifty. But looking at the data setup, we believe that, till Bank Nifty is holding above 45,500, there is a high possibility that Bank Nifty may also manage to give breakout above 45,800, 850 zone. That is the major call concentration area. If that happens, then possibly we can see a short covering action in Bank Nifty, and then possibly we can see a level towards 46,200 kind of level on the Bank Nifty also. So till Bank Nifty is holding above 45,500, I think one should remain on the long side of trade for Bank Nifty also.
Just an interesting data point there, Rajesh. The weightage of banking shares in Nifty has fallen to a 5-year low. And year to date, if you look at the performance, of course, Bank Nifty is down by 5%. HDFC has lost 15.5%. Kotak Bank is down by 5%. IndusInd is down by 4%, and Axis Bank 2.4%. So 4 to 5 odd percent. The only major losses have come in by HDFC Bank. What's your assessment on HDFC Bank and the likes within the banking names now?
So I think, yes, from private banking space, there was no contribution to this Bank Nifty, and the major trigger is the HDFC Bank, and still HDFC Bank is struggling to give any kind of recovery from its oversold trajectory until the HDFC Bank not manages to cross above 1490, 1500 kind of zone on a weekly closing basis. It may remain for some more consolidation for coming trading session. Possibly we can see a range towards 1380 to 1480 for HDFC Bank for some more time. Until unless stock not crosses above 1480, there won't be any short covering in the stock. But on this, surprisingly, you can see a good amount of buying interest in the PSU banks. So most of the PSU banks are holding the ground, be it a large PSU bank like SBI or some other banks. And as well as the small PSU bank. So that is very interesting to see because the lot of buying interest is towards the PSU bank compared to the private bank. But from private bank, some of the stocks like ICICI Bank is still showing good traction in terms of buying, and we believe that ICICI Bank can give some support to the bank Nifty for further more upside from the current level.
All right, I'm going to come back to you in just a bit and also speak about Paytm, which is perhaps grappling with a lot of, has been under pressure, saw some recovery, but markets open first. Nifty 50, let's look that up. Okay, 0.5% of gains clocked in on that one. 22,043 odd mark. We're waiting to see what kind of further gains can the markets actually extend on to for the trading session. Bank Nifty is also looking at gains to an extent of roughly 0.6%. And if you look at the other trends that we're looking at, the mid cap and the small cap index, fair bit of outperformance coming in on that one as well. Clearly, it is a good market. And we are seeing that exuberance perhaps, it's alternating between the negative and the positive territory, at least for the last 10 to 12 odd sessions. And today is a day when we saw some amount of fair bit of recovery that came in the previous hour of the trade yesterday. And today's session is just extension of sorts, a bit of exuberance ahead of the RBI monetary policy meeting. Perhaps there's not much of excitement coming in. Feb 8th is when the outcome is going to come in. But that remains to be seen whether there's going to be any surprise coming in. Not really anticipating, the consensus view is not really anticipating any amount of rate cuts to come through. Pull up top gainers and the top losers of the day just to see where the trend is shaping up. Well, top gainers, we have Britannia, Axis Bank, State Bank of India, which are some of the top gainers on the list that we have. Britannia has, of course, reported in the numbers. Asian Paints is doing well. Berger Paints is reported in the numbers. Eicher Motors and Hindalco. These are some of the top gainers that we have on the list right now, along with Coal India, Grasim and Adani Ports. Clearly, the market breadth is hugely in the favor of advances as compared to that of declines. But let's pull up the top losers, if at all. Advances 45 to 5, declines Power Grid, Infosys and UPL. Well, these are some of the top losers on the index right here. Along with that, just the list remains to be a little on the downside. Rajesh, I would first like to chat about Paytm, then go to Asian Paints here.
So very strong supply pressure in Paytm since last couple of trading session, but recovery is taking place from its almost all-time high level. So looking at the technical structure, 435, 430 is the critical level on the downside. If it breaks those levels, then possibly we can see furthermore continuation of the down move in the Paytm as the structure has turned weak across all time frame. So yes, the stock is already in oversold trajectory in terms of price. So some pullback we can see towards 490, 500 zone. But again, I think it's avoid from our side at this moment because still those who are stuck in the stock, they are still, trying to exit in this pullback. So I think some more supply pressure is likely to be there. So I think at this moment, avoid this stock. Don't try to trade as the news flow is still not settled down. And I think a lot of supply pressure is still awaiting for the stock.
Okay, all right. I'm also going to be addressing in Britannia next because that's going to be one stock that you need to watch out for. Of course, it's also one of the top gainers that we have. If you look at the stocks in news, Britannia, it's largely, if we can pull up the numbers, they're largely in line with estimates. The volume has actually surpassed the estimate. There has been soft realization. The company has essentially taken price cuts to support volumes, and that's what is reflecting even on the top line performance of the company. Nevertheless, the stock is up by 2.9%. If you look at the volume growth trend for Q3 FY24, the number is 5.5%. The biggest jump that we saw in terms of the growth was back in Q2 FY23 when it was 4%. It's almost at 6-7 quarter high when it talks about the volume performance. Next up, let's also discuss in Nykaa before we go across to Rajesh. There's a good performance which has come in by Nykaa as well, and good both on YOY and sequentially. The revenue growth, FSN, that's the name that we can pull up. Good performance both on YOY and sequentially. The revenue growth has led into the operating leverage for the company. The PAT has doubled in on a lower base, and the key demand drivers for the quarter are three things: festive season, Pink Friday sale, along with that Nykaa Land event. Of course, Berger Paints too, better than industry performance. If you can pull up just the earnings, there is a better than industry performance for Berger Paints, the likely market share gain in the quarter, and the gross margin expansion has led to EBITDA and the bottom line performance of the company. But coming back to you, Rajesh, what do you make out of A, Britannia, and B, Berger Paints, which is also doing well in trade today? Beg your pardon, Asian Paints, which is doing well in trade today.
So still, most of the FMCG stocks are consolidating. Britannia is also consolidating since last couple of weeks. Almost this is the fourth consecutive week where we are seeing very narrow price range for Britannia. Though overall long-term structure is bullish for Britannia, once the stock manages to cross above 5250 kind of level, then possibly we can see a breakout trade in the stock, and then we can see a rally towards 5350, even 5500 kind of level for Britannia. So I think those who have already bought or willing to buy at this level, they can buy and accumulate. But yes, it may take some time to give breakout. But once the breakout is done on above 5200, then possibly this rally can extend in very short period of time. So one can buy with this stock with stop loss of 5130. That's the stop loss one can keep for near term to short term investment. If we talk about Asian Paint, as you pointed out, so Asian Paint is still underperforming. The stock is trading near to its recent swing low. I think 2940 is the critical level on the downside for Asian Paint. If it breaks those levels, then possibly we can see further more underperformance, and possibly stock may go down further towards 2850, even 2800 kind of zone. So stock is looking weak on the near term as well as on the short term structure. So I think Asian Paint is avoided at this moment.
Okay, just a quick check of the F&O ban. What is coming new in the ban is Asutosh Leyland here, where you need to keep an eye out on. Still in ban remains Z Limited. Along with that, you have India Cement too making it to the list. Along with that, you have Indus Tower. These are some of the names which are currently in the F&O ban list. But anything that looks exciting, Rajesh, Nykaa also has soared as much as 3.5%. What's your view on that one? Looks like it's a day when these new age company stocks are finally getting some amount of fair bit of traction. Not sure what the story is for delivery, though. That's the one that I need to check out for. But net, it looks like a good day.
So after gap up opening, Nykaa again, attracting some supply pressure on the higher side. But looking at the overall structure, we believe that some recovery trade we can see in Nykaa. Though stock is trading near to its multiple support zone area, that is at around 155, 158 zone. That is very important and critical at this moment. If it's a hold those level, then possibly some pullback action we can see towards 175 to 180 on the higher side. So Nykaa, those who are already bought can hold with stop loss of 159. Possibly we can see some traction on the higher side in the stock in the near term. Delivery, as you pointed out, yes, that stock is looking promising on the technical setup. Stock managed to view breakout of its previous swing high of September 2023. Looking at the breakout on the daily weekly time frame, we believe that now stocks holds above 455, then possibly we can see a target towards 495 to 520 on the higher side.
All right, Rajesh, we're just going to leave it at that. And thank you so much for taking out the time and having this conversation here with us.
Yeah.
All right, coming up next is Asutosh Mishra, who heads the research institutional equity at Ashika Stock Broking. Morning there, Asutosh.
Morning.
All right, let's start off with your assessment of the FMCG basket. Do you think it's perhaps this quarter is the quarter for FMCG, because we're seeing fair bit of traction coming in from Britannia? The volume growth has at least revised up. Realizations have been soft, but what is the story otherwise for these companies?
So, no, after a few quarters, we are seeing that good traction on a volume growth is there, and general elections is also ahead of us. So, I think this momentum will continue for the FMCG stocks at least for the next 2 quarters from here. And post that, we need to see where the monsoon session, basically monsoon season, will be there. So, these will be the important things to watch out. But yes, this quarter is a very positive, compared to what we were getting in earlier quarters.
Okay, what do you like from the FMCG space at this time in the pecking order as per the valuations?
So we don't have very active coverage on a sector as a whole, but if you like, we have at this point of time all the large cap stocks. We clearly see that they are very well placed in overall. If from the market perspective, if you look, probably this can be the year for them.
Okay, let's talk about Paytm. Beg your pardon, sorry. We've seen a bit of finally some recovery which has come through. Of course, media reports are suggesting that the founder has been holding conversations with the finance minister, has been meeting up with the RBI, but looks like a serious damage is done this time around. There is no going back from where they've come. Time and again, there have been a couple of instances where the RBI has pulled up the company on account of various allegations time and again. How do you view this? And if Paytm was to go down, do you think any other payment banks would be able to replicate the same success story, or perhaps there's going to be a fair bit of caution now within the payment industry put together?
I think what RBI is doing probably is trying to give examples to the industry also. So they were warning Paytm about this issue from a quite long period of time. If you look at the first action was 2 years back, and Paytm was not able to put their house in a right orders so that they get clearance from the RBI, and it was a series of that action where RBI was forced to announce these type of actions at this point of time. If you look whether Paytm able to survive this whole thing or not, management is trying to do a lot of things. They have got some high-level meetings also in the last few days. And if you look at profitability-wise, it will take a time for company to come back. But whether they will able to address the concern which RBI has put to them, which is not there in the public domain, we all are guessing that what is the actual issue or where the RBI has found the major fault line in the way Paytm was operated and the way a regulator wants them to operate. We still don't know about that thing very clearly. There are different news items at this point of time, but yes, there are some high-level meetings is there, and we need to see how that span out. Some part of the business, especially payment part of the business of the Paytm, is doing quite well in the terms of the customer acquisition, but not in the terms of the profitability. What happened in the last 3 months, not only this, if you go back only 2 months back, Paytm has revised downward their earning estimate mainly because of the RBI restrictions coming on the personal loan front. So that was the area where Paytm was hit first by the RBI, and now that was industry-wise step. But yes, Paytm was one of the major adversely impacted company, and now with this, we need to clearly see that how company will able to progress from here onward.
Do you belong to the buy rating camp for Paytm, or it's got to be a strictly avoid for Paytm?
In my view, it is strictly avoid at this point of time till the time any new buyer emerge, not in the buyer, but a strategic buyer who can really bail out the company at this point of time. That will be very important to watch out. Any financial institution, if able to come out of this situation, only happens when that someone new strategic buyer comes into the play and is ready to put house in the order. Then only things can be in right direction. So that we need to watch out for. Currently, I am not getting any of those indications, so I will remain out of this.
All right. Apart from that, let's also chat about the banking sector. Apparently, the weightage of banks in Nifty has been the lowest rather in 5 years, according to the NSE fact sheet. How do you look at that? I mean, do you think it's an opportunity now to go ahead and lap up some of these private sector bank names, or you gung-ho on the public sector, which is, the valuation still remains to be relatively reasonable given the kind of issues also that they're facing? What's your assessment? PSU versus private? If private, what's the pecking order looking like?
Okay, So at this point of time, surely PSU banks looks relatively better placed than the private banks. The simple reason is that no, the loan growth is not the issue. Issue is deposit growth, and in deposit front, public sector banks are better placed than the PSU. Because of their branch network, because of the back by the government, and as well as the higher SLR holding, like in between 2013 to 2021, if I say, their lending was far less, and that's why they have very excess SLR holding. Like if you see the recent call, SBI still mentioned that they have excess SLR holding of more than 4 lakh crore rupees at this point of time. So still, to grow the loan book, they have fund available, without impacting their cost of fund in a bigger way, and that's what market is playing on. The CD ratio story is also is a more put PSU banks on a more positive light front. So PSU banks will remain on focus area. Valuation is still reasonable for them. And capex cycle is returning back. So when the capex cycle normally returns back, PSU banks are the major beneficiaries of that cycle, because they can expand the loan book at a much greater pace without less competition from the private part of it. So put together, everything looks at a much better way ahead for the PSU banks. Even yesterday's DFS secretary's interview was also indicating that from the government side also things are moving in the right direction for them. So in my view, at this point of time, PSU banks will remain the focus at least for the 5-6 months. But if you look from the long-term perspective, one of the important comment we can take from the DFS secretary's yesterday's interview is that private bank continue to gain market share, and that is the story which is panning out from the last 10-15 years, and that will continue from here too. And that's why some of the private sector banks may not be participating very aggressively at this point of time, but remain a very good big from the medium to long term perspective out there.
What do you like within the private sector bank, and you think PSU bank story is now done and dusted with? Since you have spoken about the FM comments and the gaining market share by these private sector banks, a trend which has been playing out, something like an HDFC bank which has taken perhaps a sharper knock to an extent of 15% YTD basis, does that look attractive on valuation front now?
So yes, if you look, HDFC Bank looks quite attractive on valuation perspective out there, and probably in 1 or 2 more quarters, we will be getting more positive numbers coming out from the bank front, and post that we may see the stock may actively participating in. But at this point of time, if you purely look at within the public and private sector banks will remain more in the focus, and probably they will deliver better return than the private sector banks.
What I'd also want to chat about is the new age stocks, something in the likes of delivery, some things in the like of Nykaa. Well, Nykaa has jumped in at least 5% in today's session, just on reporting a strong set of numbers. Couple of reasons there, which has led to this. The Friday sale that has come through, the demand prospects which have been done well. The net profitability has soared more than 100% year-on-year basis, essentially due to the festival and wedding season. How do you look at it? Do you like this company?
Yes. So if new age stock, what my preference is always there, that who has a unique business model or right to win in the market at this point of time, and they have path to profitability also going forward from here. So in that way, Nykaa suits quite well. They are doing something which is putting them at a better advantage than many other peers. Yes, stock has underperformed if you look from the last 1 year perspective or so. But if you look at these numbers, and probably today's con call also, we are going to seeing some green shoots coming in, and things are moving right direction. PB Fintech is another company which is from this space is doing quite well. Delivery, I don't have very clear view at this point of time, but yes, the way the whole industry is, the outlook for the whole industry is improving. Probably, there also things will be looking good from the medium to long term perspective.
All right, Asutosh, we're just going to leave it at that. Thank you so much for taking out the time and having this conversation right here with us.
Thank you.
Right, couple of things that I'd want to mention out here. I wanted to also highlight that the primary market is quite in action. Couple of IPO which opened for subscription, and today we're going to be talking about Raashi Pheripherals. Of course, it's going to be a 600 crore IPO, which is a fresh issue only, no OFS IPO. The company has already raised in 180 odd crore from anchor investors, 50 odd crores coming in from Madhusudan Khela's wife out there, which is a company backed by the big name there. So fair bit of traction there. What is essentially, we spoke to the management also, and you can find the interview there on the website and YouTube Money Control channels out there, where they've spoken about their margin profile perhaps being a bit stable, or let's just say lower single digit. They expect to come down on the debt profile post the listing process. Almost half the debt to equity is expected to be below that 1:1 level. So that's the long and short of the company, which is also trying to foray into geographical markets, newer geographical markets, and have newer product lines. And Jana Small Finance Bank, that's another one that you need to keep an eye out on. The price band has set in the range of 393 to 414 per share. It's in 570 crore IPO, which includes a fresh issue to an extent of 462 odd crore and OFS to an extent of 108 odd crore. Capital Small Finance Bank, again, this opens for bidding on Wednesday. Today, you have a couple of names there, right? Price band has been set in a range of 445 per share to 468 per share. 523 odd crore IPO. It consists of both a fresh issue and OFS, fresh issue to an extent of 450 odd crore. It's already raised in 157 odd crore from the anchor investors put together. All right, so also, do catch us live with these management, that is Jana, Capital Small Finance Bank and Capital Small Finance Bank, right here at Money Control between 12 to 12:30 p.m. there. Got to know the inside out of how does the financial and the strategy actually stack up for this one. But what you need to also watch out for are the FNO numbers and the FNO stocks, which are going to be reporting in the numbers today. Apollo Tyres, Cummins, GNFC, Lupin, Manappuram and Trent. These are some of the names that we have on the list right now. But with this, it's a wrap, and goodbye from the entire team who puts this piece together for you. Thank you so much for watching. Please do post your feedback for us in the comment section below. For rest of the updates, stay tuned into moneycontrol.com and Money Control app.